Hey, what's going on, everybody? Today I'm looking at XRP again, and specifically the golden cross on the 4-day chart. You could see the 50-day going above the 200-day, and last time that happened was back over here. You could see this blue line crossing above the purple and then continuing, and look what happened after that. We had a pretty significant rally. So it crossed right here, and then we actually dumped, right? But then we continued to go higher. Going back even further, it happened right here, and look what happened there. So you could see the blue line crossing above the purple line. So here's the blue line, crosses above the purple line. Look what happened. Boom, skyrocket. Now, going back to where we are now, you could see this happening here. But look at what the difference here is. We want to see both moving averages pointing up. You could see the purple moving average pointing down, and you can see the blue moving average pointing up. A lot of people identify, oh, look, the golden cross, or look at there's a death cross, or this cross, or whatever. But they don't look at the angles in which the fact that they are pointing, right? So you can have a golden cross with the long-term going down and the short-term going up. But what you really want to see is you want to see both of them angled up and crossing, just like back over here. So you could see both moving averages are pointing up as they cross. So you have the blue one going up, and you have the purple going up. So both of them are going up, right? So that's the important fact of golden crosses. You got to look at the angle in which they are pointing, right? So both of them pointing up, look at that monster beautiful rally. Now let's go back over here to see what happened over here. So now it was kind of a little wishy wacky kind of move, because we had a major up move, but then it was followed by a major crash, right? So don't really give much. But anyway, the blue is going up and the purple is slightly going down, but then it starts to come back up, and now they're both angled up a little later on, which is fine, which is not bad, right? But I just wanted to point that out, right? So when you have moving averages and you have a golden cross or a death cross or whatever type of crossover you're looking at, understand the fact that if one's pointing down and one's pointing up, you got to take that into consideration, right? So for example, if the purple one was, let me actually do this. There, I got rid of the 200 moving average. So for example, if it was like this, right? Well, that's still pointing down. Something like that. So you could see there's the 200, right? Just for, for the purpose of an example, you could see that is a proper golden cross, because you have both of them. This one's going up, the angle is up, and this angle is also going up. So just something to keep in mind when you're looking at golden cross. So next time you see it on YouTube or Twitter, I want you, and someone gets all hyped up and say, "Oh my goodness, we got a golden cross! Look at this!" I want you to be smart about it, and I want you to look closely. If they're not both angled up, maybe let the person know. Say, hey, I don't know if this, I mean, obviously, technically, if it crosses, it's a golden cross, regardless of which way it's pointing, right? That's true. But at the same time, understand the differences, right? You have wise traders, and then you have, average traders, right? The average trader will identify that, but a wise trader will identify the differences. Right? And understanding the two differences makes a big difference, right? Because then you can kind of feel how bullish it is. Obviously, a golden cross is bullish regardless. But if they're both angled up, so for example, let me turn it back on here. So that is a beautiful golden cross, and it is bullish. But I would say it's 65% bullish. Now, in order to be 90+% bullish, you would want the purple one to also be angled up and the blue one angled up. And that's not to say it's not going to happen, right? It could happen later on. So if I just draw the line, here's the purple one, right? And we start, angling up as the blue one continues, to angle up. And now they're both heading to the upside. That's fine. That's what you want, right? But understand when that point comes, that's when usually the trade is initiated. Because a lot of times when you have a cross, you can have a dump. So the price comes up, right? You have the cross, but then the price pulls back into the cross, causing this short-term moving average to point down. And then finally the long-term moving average catches up. And then when the price comes back, then they both start angling up. So you see what I'm saying? So you want to see both angled up to have 100%, well, nothing's 100%, but 90+% confirmation that, yeah, the trend is on your side. So just something to point out there on XRP and moving averages. Moving averages can go like this. They can go like this, right? Where they're both pointing up, or they're both, pointing down, right? So, just wanted to point that out because I saw this here. So here's a chart I saw on Twitter. I'm not knocking the chart. I think it's a beautiful chart. It's a beautiful chart. But there's a little issue here. So if you notice down here, it says golden cross with a 64% correction after a 700% parabolic move, then moon. But you can see both moving averages pointing up as the cross took place. This one here, you could see the green going up and the orange going down. This one you have the orange going up and the green going up. So if you have the orange going up and the green going up, look at, you get this monster move. This one, you have the green going up, the orange going down. But then obviously later on, then now the orange one is going up right here. You can see it's pointing up as this one's pointing up. So it's kind of a little delayed. And now the one we have here, look at this. The orange is going down, right? And the green is going up. So, just like the one over here, you have green going above orange. This one's green going above orange, but the orange is pointing down, and this one, the orange is pointing down. But over here, they're both pointing up, right? So it matters. It matters. Now, what I can say, right, is potentially, or eventually, let me do a little screenshot here. And let me see if no, I need something bright. There we go. So eventually you're going to have this one coming up, right? And then this one also going up. So you want both of them angled up. But when they go up, they can, it could be another couple months from now, right? So this one down here, it happened immediately. So just something to keep in mind when looking at that. So yeah, other than that, I think that we just wanted to clarify that. If I put the bull market support band, this adds another layer to it. Now I love how you have the price hanging about the bull market support band, which is very good. Right in here, you have this nice support area, right? Just like back over here. Now, the difference here would be obviously this moving average is way above, right? But you could see the shorter term moving average and the bull market support band both holding the price nicely, just like over here. So we want to see some momentum here, and just like we had here and then a shot up, I want to see that same thing. I made a video yesterday going over all of that stuff, but what I want to see is some confirmation. So just basically to summarize very fast, I had a couple different options. Either this is finishing up a E wave where we have A, B, C, which would be the end of wave E in this broader sort of triangle here, right? This contracting triangle that Bitcoin did, Ethereum did, a lot of other coins did, right? So something like this where it could actually break the trend line, just like over here, right? So for example, just, I did this last night, so maybe some of you know already, but look at that wick there. You could see it broke the trend line to the downside. Now that's not bad, that's just a liquidity graph for big guys who want to have their bags packed, right? Or I should say their orders filled. So we could have something like that where you have A, B, C, D, and then E, right? So there you go, right there. And the same thing's happening here, but on a bigger scale. A, B, C, D, and now look at this. We're finishing up E. So the same thing there is the same thing potentially over here. So that's one idea. That's idea number one. And the idea would be you have this this three-wave move to the downside. So for example, you have 1, 2, 3, right? You have 1, 2, 3. You have 1, 2, 3. And now you have 1, 2, and then coming down for 3. And then moon. And when I mean moon like literally moon, right? So that's what we're looking for. So if we have this, and then also you have this sort of five-wave move, this diagonal, right? 1, 2, 3, 4, 5, A, B, C, right? This diagonal, this leading diagonal that's leading us into a bigger move, right? A bigger move. So so you did leading diagonal here, 1, 2, 3, 4, 5, and then A, B, C, right? Grab that liquidity. You would also be breaking this trend line. So you see this trend line right here? All the retail's looking at that. If we break that trend line and, all the retail's going to go short, they grab that liquidity for the E wave, and then they take it way to the moon, and everybody got wiped out, right? Because if people are leveraged long right now, they can take out all of their positions long, make everybody go short, then take that liquidity and then drive up the price. And that's usually how they drive up price, right? If you ever wonder, how does price rise in such a monster way? Is it just people buying on the spot market? Yeah, a little bit. But a lot of it has to do with the way money flows through the market and out of the market. And that's from long positions and short positions. And, short positions drive up the market higher. And you could say, well, how's that possible? If you're short, you're betting that it's going down. That's true. But if the bet doesn't go down, then what happens? It goes the opposite way. So that's obviously idea number one, which is basically a three-wave move to the downside. So we'll have to see if that plays out or not. But taking everything off the screen here, again, you can see that nice cross above the bull market support band, just like back over here, right? We're hanging above it. And so yeah, that would just be idea number one. Again, A, B, C. You break this trend line, you come down here, you grab that liquidity. Everybody's panicking. Oh my God, we're going down, we're going down. You know, they're gonna think we're gonna continue down, but it just shoots right back up. And it's a trick, right? It's a trick, and that's what happens after a leading diag, right? You have this diagonal right here, 1, 2, 3, 4, 5, with a three-wave pullback, and then a continuation, and that would be wave E. So, you know, just to reiterate, second idea would be to say we don't need a pullback. In fact, we're already done. We're testing the bull market support band. We're testing our resistance up here, and which is now our new support, right? Actually, we haven't quite tested it, if you see. So here's our resistance right here, right? You break above the resistance, anomaly from the SEC Torres decision, right? So I don't even pretend that's not even there. So really it's just this. But anyway, we break out above the bull market support band, above this resistance, and now we just have a small ABC. So right here, A, B, C. So we come down, we test it, we're up now, we come down again, A, B, C. Right? What that would look like zoomed in, remember this is the 4-day chart, so it's not going to happen rapidly. Let's go to the 16-hour chart. Yeah, so something, let me take all that off. I'll put our line back on here, around that 54-cent line area, right about there. And then the price comes up in this A, B, C. We come down. So we tested it once, right? And notice how it's crossing over here too. So yeah, the bull market support band will start angling higher, right? As it's going higher, we come down, we test it again, or we come down and we test the top of this resistance, which would also be A, B, C. We test the top of this resistance, and then we continue higher, going back above the bull market support band. Right? Personally, I'd rather like this idea. It would be better, right, for me. But obviously A, B, C coming down here, that would be awesome too, because, you know, buying more XRP, it'd just take longer, right? It would take longer. I mean, going into next spring, that would suck, because then all of December, January, February, you know, it just like, we don't have much time, you know, because Bitcoin's in a retracement. It's not going to be retracing forever. So I really would like to see this thing get going sooner rather than later. But if we do come down in this E wave, maybe it's not that big, right? Maybe it's not that big. So those are your two options there. So A, B, C. Maybe it only goes to January, somewhere around here, and then we go, right? Or we just have a smaller ABC right here, A, B, C, right? So like a double bottom here. So for example, we actually already have the double bottom, maybe, and then that leads me to my other idea, which is already finished. But before I talk about that, so notice how we tested it here, A, we came up in B, and now we're working on C, right? Or WXY, we come up like this, right? We test it again, so that's like a double bottom. Double bottoms are bullish, and then we continue rocking it to the upside, right? And then what that would do is if you take this trend line here, right, and sort of match it up around these wicks, you can see what? A beautiful what? Cup and handle. Massive too. You have this big cup, and you have this handle, and then you have the neckline, right? Come down here, retest this bull market support band, break above it, back test it, and then baby, we are off to the races. And that's sort of how I'm seeing it. Those are the ideas right there. Those are all the ideas. And you know, or this thing can be done now, and we don't need to come back down. But honestly, I would like it to, because we only tested it once, right? Look how many. Let me go back over here. Oh, come on. Let me go back over here. Look how many times it tested it over here. I mean, it was like, look at that. It was like making love to that bull market support band. It was just in and out all over it, right? And that's a good thing, because it's think of the band like a charging station. Think of the price like an electric car, right? The electric car can only go so far before it needs to come back and recharge. And then it's recharging, and then it has a full battery, and now it can blast off, right? You know, same thing over here, right? This move was pretty big, and it happened when? On this sideways bullish consolidation above the bull market support band. So we had this up move, this down move into the bull market support band, which led to a big rise. So same thing over here. Same thing, look at that. We have this up move, this down move into the bull market support band. What comes next? Potentially a big mega blast off, right? So yeah, those are the ideas right there. You got ABC, go. Or ABC, go. Or just, you know, continue to consolidate and go. So really only two ideas, really. And those are the two bullish ideas. Now the bearish ideas would be the mega bearish idea, which is basically saying this thing needs to do this. A, B, C, or WXY. Come way down here, 17 cents, even possibly as low as I would say between 11 and 17 cents area. I mean, it can even go down to 8 cents. I'm not saying it is. You know, oftentimes when things seem too crazy, like there's no way it could do that. Sometimes it happens, right? So you have 1, 2, 3, 1, 2, 3, 1, 2, 3. So you would have a W, an X, and then a Y, and then we moon. But that would take some time, right? That would be not until when? Well, according to the drawing, another year from now, right? So we have to see. So if I take the length of this and I put it here, and then I take it and I put it to the top of there, it gets us to about September of next year. So if we're lucky, probably another 6 to 8 months, and then another 3 months of sideways. So probably about a year before we start to blast off. So that's your bearish idea. Now, I'm not going to entertain that until what? We break what? The low, which is where? Down here at 30 cents. Or actually, if we start breaking below 34 cents, I mean, not talking about wicking, right? A wick down there like a flash crash, that's different. But I'm talking about daily, weekly candles trading below this range, then yeah, it's going to look bad. But at the same time, there's no other asset I see out there that has the capability of XRP just based off the structure that I'm looking at, right? I mean, it's only had one bull run. We had this mega sideways action, this mega pump, and now we're in this other super mega sideways action. Sideways action is the most bullish action because that's setting the stage. It's setting the foundation for what's to come. You're basically laying down the pipes. You're laying down the groundwork to then build the city, right? So, yeah, those are the ideas. Don't want this video long at all. Hope you guys enjoyed. Just keep an eye out for the bull market support band. Basically, if you go to the indicator, just type in bull market support band. I think that is one of your best areas, because look at if you understand we're in an uptrend, you can see you bought the dip, right here it didn't hold it. Instead it broke below it, so now it's acting as resistance. But then look what happens, we get back above it and now we're holding it as support. So it's a good little indicator to have. Also, I like TD sequential. That'll be a different day to go through that. But yeah, if you could see the bull market support band, it often acts nicely. Look at this, resistance. We get above, now it's acting as support. We broke below, now it's acting as resistance. We get back above, now it's acting as support, right? It's acting as support until it doesn't. So it's really good. Even with Bitcoin, it's good. So going to the total 3. So the total 3 is basically XRP. It is the chart you want to be looking at for the total market cap, including XRP. And what we can see here is a beautiful inverse head and shoulders pattern here. We have a nice head going right here. Now it doesn't look like it wants to go too much higher, but if I take this and put it right there, we do have more room to the upside. And I think if we do get up there, I think this would be a good target for the total 3, which is basically all the altcoins in a nutshell. All right, except Bitcoin and Ethereum. So yeah, I'm liking the way this is looking, but you know, you got to be careful because it looks 3 wave-ish, right? 1, 2, 3, right? If you have 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5, that's usually an indication of more downside to come, but it's not over yet because we still got some more room to go potentially, right? But just like with Elliott wave, you have 1, 2, 3, 4, 5, A, B, C, right? So it's the same thing, but in reverse. You have 1, 2, 3, 4, 5, A, B, C. We go into retracement, and then what happens? We come back down. Unless this wants to turn into a 5-wave move, which is okay, or crash, rise, crash, retrace, reaccumulation, in which this is a 1, 2. Now we're in 3. We get 4, and then we get one more push up with a 3-wave pullback. Kind of go sideways a little bit and then go up. That would be a rise, crash, retrace, reaccumulation sideways, right? Here's our box down here of support. So this is all support. You break above the support, and then instead of crashing down, right, because there's no structure, what do? You build support above this support, and then you start to go. So that's what you want to see. If you want to see total 3 and everything continue to go higher, you want to see a break above, which we're getting now. We're not there yet, but a little bit higher. Then you want to see a pullback, a back test of the breakout zone, and then oscillation, which is basically accumulation above this support range, and that would allow us to continue to go up, right, and break out. And that would be like an A, B, C, rather than an A, B, and then C down here. So just something to keep an eye on. But that's it, guys. Thank you guys so much for watching. If you can, please leave a like, a comment. I just wanted to bring up that moving average concept and understanding golden crosses and death crosses and things like that. I didn't really talk about the death cross, but the same thing applies with the death cross. If you're super mega bearish, you want them both pointing down, right? Same thing if you're mega bullish, you want them both pointing up. Now, granted, they can both point up at a later time and day, but at the time of the cross, one's going up, one's going down. So just something to keep in mind. But all in all, I'm still very bullish on the market. I want to see more continuation, right? If I had to make my best guess, I say we come up here, and if we come up here, that means XRP does too, and all the rest of the coins, because it looks like we got a break above this, right? So look at this. Here's our resistance, right? We broke above the resistance. Look what we did. We came down, we back tested it, and now we're going higher, right? So all we got to get through is this right in here, right? And then it's all open air. Look at this gap. Look at this big gap. As soon as we slice through that, it's open air. We can straight shoot, like we could get there in 2 days, or maybe even a daily candle. Straight shot right there. Boom. But always be conservative. It could take a couple weeks actually. But or right, because look at this is this is resistance, resistance, resistance. But then once you break all of these, which we're doing now, then look, you have a big open candle. This is one shot or a red candle right down. So if we break above this, it's the same thing, but in the reverse, we have a green candle going back up, right? And then in which case, then you would fill in the gap with an A, B, C, and start building up this volume profile. Because right now it's all thin air, right? It's all thin air. And then we can make the decision if we're going to continue higher or go back down lower. But for now, it's looking very nice for a continuation. And then to get really in the short term, if I go to the daily chart, yeah, it looks like she wants to go up a little more. But in the event, now look at this. We never tested the bull market support band. So here's the bull market support band down here, right? So what we can do here, it's pointing up big time. So what we can do is we can go up maybe a little higher, maybe not, and then A, B, C, three-way move into the bull market support band, test it, hold it as support, then continue higher, getting back through this gap in here, right? And then starting to stall out and start to range a little bit, right? So look for a pullback soon. Maybe we don't get it. I don't know. But just know the bull market support band's down here. So it'll be interesting to see. There's no reason to panic. There's no reason to be... just be optimistic. Until the chart says, hey, you should panic. You should start to be concerned. We're not even close to that. We are actually at the beginning of something great, potentially, right? Not financial advice. Now remember, this retracement's been going on since 2023. So the beginning of 2023, we've been going up. So from here all the way up to here. So if I take a line from here all the way to where we are, that's an upwards line, right? So we are trending up from 2023 to 2024. Most people were what? Bearish. But then what did we do? We went up. So, and then once people start turning bullish, then you're going to start to think, now we're probably going down. But not yet. I still think we got to get up into these retracement levels up in here. So let's hope for the best and prepare for the worst. And I will catch you on the next one. Cheers.